Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. It's Friday, the 27th of July, 2007, and once again we had selling on Wall Street. We had the S&P closed down $2.91 at 145.11. That wasn't the 4 p.m. close, but that's where it's trading right now. It did sell off almost another dollar after the official 4 p.m. close. So down about 2%, and we're right above that rising 200-day moving average now. This is the reason why I've said the last few days and consistently said that picking a bottom is the toughest job there is on Wall Street. Now, I had outlined a potential trade early on in the morning in the Nasdaq, but as I said there, it was only for the most aggressive traders, but realistically, the best advice that I gave was yesterday, which was today to take today off. There's no signs of a bottom here. We've got all these moving averages heading lower, and like I always say, as long as this 5-day moving average is declining, we want to give the benefit of the doubt to the sellers in the intermediate term, and you could have avoided large losses in here. The pattern of lower highs and lower lows has not been interrupted yet. There is no sign at all technically here of a market that's even starting to probe for support. So there's no reason to be involved in the long side. And taking a look at the weekly time frame, you can see that these highs from back in February, which looked like they were acting as support yesterday, were actually taken out, and we closed below them as well. Now, there's obviously a lot of panic in this market right now, and you know, whether it continues lower is anybody's guess, but the trend is clearly lower. So the best bet is to continue to stay on the sidelines and let the institutions do the dirty work of figuring out where this bottom is. The IWM, Russell 2000, is really in the worst trouble here. It broke this uptrend line. It's well below that 200-day moving average right now. And this is really the market that failed to break out over the last 2 weeks. And then as it broke below that 50-day moving average, it's just been really a bloodbath in there. There was really, you know, 2 days ago it looked like maybe the 200-day moving average was going to act as support, but I said that's not a reason to buy. You don't buy stocks because they're at a moving average. What you do is you look when you see at a moving average, then you want to start to look at the shorter term time frames for evidence of buyers regaining control. And clearly, as you can see here in the IWM, we don't have any evidence that buyers are starting to gain any control whatsoever. So looking at the semiconductors, the good news is, you know, about a week and a half ago, I said you ought to be out of your short or your semiconductor positions right up around in this area, and we've had a really strong sell-off in there. I was kind of expecting that the 20-day moving average would hold its support, then I thought maybe the 50-day moving average would act as support. But the moving average is simply a reference point. It's something to compare price to. I always say that you don't buy because it's at a moving average. A lot of times the moving averages do act as support because a lot of people stop selling when they get there, and other people start to bid for stocks as it gets to those moving averages. But to me, it's just an indication that we want to take a closer look at the shorter term action and then see if there's any evidence whatsoever of buyers regaining control. And once again, with this declining 5-day moving average, there is zero evidence in there. The Nasdaq 100, the Qs, also continued their descent. They closed down just under $48 a share. They lost 2% today. So you can see that we've still got increasing volume on the way down, and this prior level of resistance here potentially acting as support near the 50-day moving average. Again, it's too early to say. There's no reason to expect that this is where a bottom is going to be. A potential trade I outlined early this morning quickly failed, but there was an opportunity to make a little bit of money in there, and as I said, it was only for the most aggressive traders. The market broke below support, and really there was no reason to get involved in there. And then later on in the afternoon, I said, listen, basically there's no reason to be involved in this market. Sidelines is the best position, and that's the way it's going to continue to look here until we start to see some strong signs of stabilization. But there's something very seriously wrong with this market right now.